All right, guys. Thanks for joining the session. So today I'd like to talk a little bit about startup studios in general and why startup studios are so hot right now. If you have any questions during the session, please feel free to put them in the chat. I'll be monitoring them for a bit, and if there's any time left at the end of the session, I'd like to answer a few of them if there are any questions. I'm Michael van Lier. I'm one of the founders of Startup Studio Builders from the Netherlands. So maybe first off, what is a startup studio? You might have heard of the term before, but what does a startup studio do? Well, a startup studio is nothing more than, I would say, a company builder. So different than accelerator or incubator, and we'll go into that in a minute. A startup studio uses all its resources to build new companies from worthy problems together with financial resources. And the most important part, together with co-founders, with entrepreneurs. So they're not supplying only financial resources, but everything needed to build and scale successful companies. So why is it so hot right now? I've used an example here, is that a lot of companies created by these company builders have now slowly become mature. And they've been around for 4 to 10 years, meaning that they could get to the end of success, they could get to the IPO or any other form of exit. And one of the recent successes one of the studios had is the IPO, the Snowflake IPO, valued at well over 70 billion US. Actually, the CEO of that company was a Dutchman from Rotterdam, and he joined the company fairly late because it was set up by one of the studio founders in the beginning, and then later the CEO joined. So not only this success, and I'll use a few more examples in the end, but a lot of other successes are rapidly following each other up. And then on the beginning of the studio journey, they're all now raising humongous amounts of funding themselves. So in the last few months, the number 770 is actually a bit outdated already. It's already well over $1 billion in new funding goes into these studios, which are growing and growing. And one of the more local studios in Europe from Belgium and France called eFounders has now slowly started raising their portfolio value well over 2 billion. So startup studios are hot. Let's dive a bit deeper into what is a startup studio and how can we benefit from that. Well, I'm from Builders. We're a startup studio. We build software companies to shape the future of work and living and to reimagine the European economy. And on that mission statement, I'll frame a bit what our studio does and how all other studios operate. So the opportunity for a startup studio, it might be really obvious, is that there are a few, let's say, areas in the ecosystem that we all have issues with. That's the lack of funding. That's the fact that there's a lot of products getting built, that there's no real market need for, and that we're still building companies with the wrong team. All that combined basically says, look, still 1 out of 10 of companies succeed. We all know that number, but it also means 90% fails. And with the studio model, we can fix a lot of those issues early on, let's say even pre-incorporation. So the solution a studio can add to the ecosystem is pooling their resources. So instead of building one company, a studio could build 10 in parallel to have not, one full-timer on board, but maybe one half a full-timer for any company, and then scale that pool up. A studio also could fix that with early market validation. So instead of just running with your company because you think it's a great idea, you need some support even before starting up your company. And then lastly, but very important, getting together the right founding team is the hardest thing. If you ever started a company and, for example, you're a business person and you need a technical person, you are out of luck because they're really hard to find. And the same goes the other way around. So once a studio gets to success, and we now have historical data because they've been around for quite some while, the business of running a startup studio is all about making sure there's less human capital waste. So making sure you get the success faster, making sure you have the right team, that all combines to, let's say, 2 to 3 times more success for all the companies that are built by a startup studio instead of built in the wild. And that basically also means it's going from 0 to Series A takes you only 2 years instead of 3 to maybe 5. So studios in the business of fast tracking. And how do they do that? A startup studio uses a model where they try to repeat the level of success, or even better the level of success, each time they build a new company. And because they do that pretty rapidly, so 2 to maybe 5 companies a year, they could use all their learnings to build a better model. And more or less, all these models look the same, and they go from generating the first ID to exiting the company. And to point that out a bit more, ID generation is something really strange, because you might think that a studio gets all of their IDs off the market or finds an ID from external founder, but actually most studios build their companies internally. So do their own research, their own ideation to find the right market to go into. And for example, how would that look? Well, in a period of like 5 years, an average studio would do research on 50 trends, build 100 sparks saying, look, these are opportunities we could go into, get to 20 opportunities, kill half of it, build 10 new companies. That's basically the process all studios go through. And this process isn't difficult, but because they do it all the time, they get better at it in their specific niche, and they're a great place to go to for founders and for investors. So how does that look in the broader ecosystem? Well, as you can see, a studio goes way further than most other programs or places you go to. And that knowledge combined basically means is that you can compact it and do it in a faster manner, right? Instead of you going to an accelerator for 3 months and then trying to find the next step or doing it on your own, a studio keeps pace and keeps moving forward until you get to like the serious founding rounds, like Series A, maybe a bit sooner. But by that time, you got traction and you got customers to show for. That doesn't mean we think a studio is a better place to be than an incubator or accelerator. It's a place where you could go to as an experienced founder and get way more resources at your disposal than you would get at the other places. So, well, you might ask, look, that's all fun and games, but this feels fairly new. But actually, it's not. The Startup Studio has been around since 1996 and was originally made up by Bill Gross from ID Lab. And this is a general overview of how long studios have been around. And you might know a few of the names on the right. The successful companies coming out of studios like a Zalando, a Dollar Shave Club, Snowflake we just talked about, or even Hims and Hers, who just did an Aspect IPO for around 2 billion US. All these companies are built by startup studios in the last decade or sooner, right? Hims and Hers is not an old company. They come from Atomic. And these studios seem to be coming in waves. Every time there's a new generation of companies, a new generation of studios follows. But for the first time since the last time, we've seen a big growth in studios being founded than before. And let me tell you a bit about that. So if you look at it from a 5 years increment, the studio world is now really exploding. And we haven't included 2021 yet, but we already know it's way more, right? So at least 300 to 400 studios are being built this year, just to make sure that all the entrepreneurial knowledge out there gets put to use, that all that human capital gets put to use. So why is it growing so much? And what are the differences between these studios? And we've made a selection here. I've made a selection of 4 types of studios to give you a general understanding what's out there, because they're not all the same. And basically the difference between studios is how much of a company is built from within, so who came up with the ID, or an ID from external founder or even running company, And then also, how much support does a studio give you versus how much you have to do independently. And if you look at this overview, there's actually 4 types. There are platform builders who do internal ideation and do everything themselves. And that also comes back that they own a lot of the company, till like service experts who do a lot of stuff independent and with external ideation. And you could say most of the time, those are working directly with corporates in some sort of venture building way. And then there are the 2 others, the execution engines. And of course, most of you guys will be from Germany, so you know Rocket Internet. They have the best execution engine out there. They take external IDs, make sure they run with them as fast as they can. And then there's the last one, the one we're really proud of to be in that bracket. Those are the crazy creatives. Those are the companies who do their own research, build their own companies, want to be as unique as possible, but also want their companies to be fully independent as fast as they can. Meaning, when you co-found a company with other entrepreneurs, you want them to become independent in 12 to 18 months instead of keeping them close and trying to nurture them. These kind of companies, the crazy creatives, they try to help entrepreneurs get even better at what they're good at. So in terms of ownership, it's a question I get asked a lot is, okay, cool, but a venture capital firm takes 10 to 15%. How does that look for these kind of studios? Well, in general, the average equity a studio holds within a company at founding is 30 to 40%, but it goes up to, for platform builders, for example, to 80% or even more. So you have to ask yourself, if you're a founder, if you're okay with that, and how much value you could get out of that for the first 18 months. So why is a studio now growing so fast? Because it has been around for a while, but it's exploding at the moment, like all ventures exploding at the moment. Well, not only studios, but all accelerators, venture funds see this opportunity on not only supplying the companies they work with or the founders they work with financial capital, but also a lot of human capital. And as you can see over the last, let's say, 5 years, the amount of human capital involved in any deal has grown up tremendously, and studios are leading the way. They have the best possible support an entrepreneur could get, but the VCs are following up suit really, really fast. So talking about these human capital services, what are we talking about? I mean, if I'm building a company with a studio, what can I expect? You could actually expect almost anything that your founding team needs. The studio is your perfect founding team. You and maybe your co-founder start this company. You don't have to worry about recruiting that talent. That talent is on board. And what a studio does within 12 to 18 months, they make sure that they're not needed anymore. They'll hire the right person for you, or you'll do that so that they move out of the picture. But until that time, you're moving at a really breakneck speed because the team is already there. They're not there as a service provider. They're there to help you out as your founding team, as your co-founder. There's no profit to be made for them. It's only creating value to make sure your company gets the success as fast as possible. So a few case studies to round off the presentation and show you how this is actually done, and maybe where you as entrepreneur and investor could knock on the door. So I don't know if you know about this studio. They're from New York. It's called Betaworks. And Betaworks, when it was founded, raised 50 million to build their first companies. And after that, they haven't have to raise a lot of new money because all of the exits they do and dividends they get were enough to keep this perpetual evergreen company going. And a few of the companies they've built, they include, of course, well known to us, Bitly and Tumblr, but also Giphy, the thing we use all day long throughout our messaging apps. And they actually sold Giphy to Facebook quite some while ago now for 400 US. Right? If they would do the same today, it would probably be more like 800. But that company was built within Betaworks under the thesis that they would want to change the media landscape and fill all the gaps within the social media landscape. Another great example, Science, from the LA area. They've raised way more than Betaworks did, but they also had way different success there. And with the first capital they raised, they've made like humongous amount of companies. But I think these are good to know. And I think that the best is Dollar Shave Club. I think we all know that example. They've made a 10,000 return on that one, right? So they only invested 100,000 US to build that together with the founding team, and they sold it for well over $1 billion after that. And that kind of success, we see a lot more in these kind of studios right now, because they're run by experienced entrepreneurs who have a background in their specific niches. For example, for Dollar Shave Club, in consumer goods. And they've been able to really capitalize on that. So if you would like to start a studio or looking into studios and what kind of data is out there, and I'll go over it really fast, is they're basically built on these 8-9 subject matters, right? So what do they do? How do they do it? And what can you expect? All studios are made in this manner. They're looking at, how focused are you? Are you doing your own ideation? How much time do you spend on building these companies? And this is actually a metric which you can look for if you wanted to start a studio. And if you're interested, just give me your details in the chat and I'll send over some more data on that. So maybe to close it off, because we've got like 5 minutes left, and then I'd like to do a few Q&As if there's any. So what's the opportunity for the investor here, right? I mean, if an investor wants to invest in a studio, he's basically investing into a company builder. How would one know that they could build several companies? It's a totally different game than building one company. So what the main thing they actually gain from this as an investor, now we're talking to quite a lot of them, is like when you invest as an LP in a venture capital fund, you get access to the GP, the one who selects your companies, who talks to the promising investments. But with a studio, you get direct access to the top entrepreneurs who actually build these companies. So that basically means instead of you talking to your fund and they're talking to the best entrepreneurs out there, because within a studio, the top entrepreneurs are building those companies, you get direct access to the entrepreneurs. So especially for family funds, especially for bigger angels, this is a way to be interacting and to adding your network and knowledge directly into these companies and knowing who you would invest in. So to round it off, a studio is a company builder who basically speeds up the process of building a company by removing all the constraints you would normally have. They could build a company 2 times faster, or you could say they could build twice the amount of companies you would normally be able to build with the same amount of capital. So they're a really efficient way to fix that. And on the other end, for an entrepreneur, I mean, it's a long journey. There's a lot of hurdles. A studio could help iron out a good portion of them, right? Not all of them, but for the first 18 months, they could really help you out and speed that up. So I'd like to answer a few questions if there are. I see Christoph has one. Scientific work on startup studios. Are you interested figures on cost benefits of startup studio published? Yes, they are published. I think we're part of the global startup studio network, as well as the Studio Hub network in Europe, who have done extensive research on how efficient it is to run a studio, or for an entrepreneur, why it is a good idea to run with a studio as well. All right. If there's no further questions, we're nearing the end of our session. I would like to thank all of you for joining in on the session. And if you're interested as an entrepreneur or somebody from the ecosystem, or even investor, I would really like to talk to you and tell you more about why a studio is such a great way to build a company or to be involved in as an investor. My details are on the screen, and I'll be more than happy to answer any of your questions. Thank you very much.